When it comes to people who predict future trends and prices for real estate in Toronto and the GTA, I trust very few so-called experts. One of the few that I do trust is Benjamin Tal, Deputy Chief Economist at CIBC. He's a brilliant thinker and one of those rare, truly knowledgeable experts who can intelligently guide us into the near future, looking at both the economy at large as well as real estate specifically. Last week, Mr. Tal did a major presentation at the Toronto Regional Real Estate Board's annual meeting. Today, I'd like to share one of those predictions that Mr. Tal made, specifically on what he sees the market values of condos in Toronto and the GTA, where it will be going over the next few years. Before we delve into that, let's do a brief overview of the state of the condo market from 4 years ago until now. The peak of the market was just before the Bank of Canada started raising its interest rate for the first time in years, which was spring 2022. The absolute height of the condo market was winter, March 2022. Buyers were frantically trying to lock in historically low interest rates before the coming rise. Combined with also a very low number of condos for sale at under 3,300 condo listings for the entire GTA, the average price in the GTA hit an all-time high at $840,624 that month, March 2022. Since then, the overall trend for condo prices have been downwards. It hit the lowest average price in July 2025 at $660,662. October 2025, it's now up to $677,662, or about 2.5% since its low in July. October's number from the peak of March 2022 winter were down 19%. Reasons for this drop in market value since the spring of 2022? It was obviously the rising interest rates, which scared off a lot of buyers. The number of buyers fell, which meant the number of sales fell, and that in turn affected pricing, which also fell. The interest rate kept rising until June 2024. So basically spring 2022 to June 2024, the interest rate was rising. From June 2024 onwards, the interest rate started to come back down. And almost 1.5 years later, we've dropped to the Bank of Canada rate of 2.25%. As you can see, this significant interest rate drop hasn't reversed the continued downward trend of market pricing. Sales volume, or number of sales, however, is finally up year over year from July to mid-autumn. That brings us to today and Benjamin Tal's predictions. What's keeping condo prices down despite the lowered interest rate, low inflation? Mr. Tal emphasized the biggest detriment to real estate in the GTA right now for market value is lack of buyer confidence. The trade war with the US has created a lot of unnecessary stress and insecurity amongst buyers, which is understandable. The other factor is the enormous amount of active condo listings in the GTA. Remember, at the height of the condo market value in March 2022, I mentioned, there were less than 3,300 units for sale in the entire GTA. This past October 2025, there was a whopping 11,000 condos for sale in the entire GTA. And that's even dropped from May 2025's all-time high of nearly 13,000 units, again, in all of the GTA. Those are the two primary reasons that condo market value remains low in the GTA. Mr. Tal predicts that with those factors, the condo market value in the GTA will go down another 5 to 7% over the next 1.5 to 2 years. However, after that, prices will start rising, perhaps even dramatically. What does Mr. Tal attribute this prediction to? Trump's continuing trade war has affected the U.S. economy negatively. In order to retain power, he's backpedaling on some of his more extreme demands and tariffs, and will continue to do so as the U.S. economy further drops and he loses popularity. How does that affect us here in Canada? Well, Mr. Tal predicts that while tariffs will remain, they'll drop down to around 8 to 10% for Canada due to Mr. Trump's compromising, and focused on specific sectors, not across the entire spectrum of the economy. This is manageable and will ease the insecurity of Canadian buyers. With buyer confidence returning, expect an increase in sales. Our inflation rate is currently at 2.2%, which is well within Bank of Canada's ideal and a manageable amount for Canadians. It's also almost a full 1% lower than the US inflation rate. Condo inventory will continue to go down, especially as new construction build has all but stopped in the GTA. Basically, no new construction has started in the last 2 or 3 years. With that reduced inventory comes more competition per unit, resulting in price increases. In 2 to 3 years, the lack of new condo build will also contribute to that lack of inventory. It will be years for the build industry to catch up after that, which means prices will dramatically increase and stay up for an extended period of time. So, practical advice for buyers right now who are looking to buy a condo. Mr. Tal's informed prediction of a further price drop of roughly 5 to 7% will likely happen over the next 1.5 years. That's not a huge amount, but if you want to try to wait it out for the bottom of the market, it'll be likely around then, 1.5 years. On the other hand, inventory and choice is extremely high right now, and prices are already low compared to the peak, when, as you remember, market prices were up 19% from today. I'm not seeing multiple offers or bidding wars for condos right now. So the market favors the buyer with both massive choice and a lack of competition. Most economists, including Mr. Tal, also predict that the Bank of Canada will remain at 2.25%. So buyers don't expect any further reductions on the interest rate in the near future. For all those reasons, now is also a decent time to buy. Bottom line, if you're a condo buyer, buying now to about 1.5 years into the future is wise for low prices and large volume of inventory or choice. See you next week.